so everybody can figure it out. Let's do it. So everybody, welcome to the Sunday live stream. I'm joined as ever by my friend Jerry V. Hall. Jerry, you're back in your new place, it looks like.
I am home.
Nice. Costa Rica, beautiful place. You got some nice backdrops, Bitcoin piggy bank, and so on and so forth. So that's great. How you feeling today?
I'm feeling great, and absolutely been encouraged that you're diving down a rabbit hole that I've found very comfortable over the last year and a half or so, and that is looking at your last couple of big posts that I followed on X, where you're actually looking into electricity and the valuable commodity that is, and what these emerging industries of AI and Web3 and blockchain, the constraints they're putting on that industry and the opportunities that are going to present themselves to us as we move forward.
Yeah, we're going to get into that because there's going to be a big fight. Everybody knows about AI and compute, especially the ones that have followed this channel. But it's also the electrical consumption that is being done by AI, like the ChatGPTs, the Groks, the DeepThinks of the world. And also we've got another big glutton of energy, which rightfully so, is the Bitcoin miners. We're going to take a look at the energy consumption and the actual resolution, which actually came from Jeff Bezos, which I thought it just blew my mind what he said. But before we get into all of that good stuff, there's a comment from Ashley, and she says, every weekend's been boring for the last 3 months, and then this. And what Ashley is talking about, which I'm sure most of you all know, is Bitcoin last night just went off and hit an all-time high. I don't know if it was Saturday morning or Saturday evening or Sunday morning. I have no idea. Let me see here. It was right after midnight when I was resting peacefully. And we hit 125,506. And of course, as we hit these all-time high dingers, we're going to see that people just start doing what they do, which is sell off and wait for the next pump. So we're going to take a look at today is we're going to take a look at who's selling, why they're selling. And just don't expect this trend to not stop. It's going to continue. So yesterday, we talked about two different itemized factors as far as to look at. One was those Bitcoin percent addresses and profit. And even yesterday, we were at 99% or something like that. And we also took a look at the NUPL, the net unrealized profit and loss. And before we get into some other ones I want you guys to be aware of and where to find them, I will just say, and this is interesting, we've looked at CoinGlass and all their 30 top indicators, and not one of them has popped off as to say, like, this is a good time to sell. Indicators say, hold right here. However, there are people that don't care about indicators, which is fine. And there are, I don't know if this is smart money, I don't know if this is big money, but people are taking profits along the way. Before we get into the other stuff, Jerry, what's your thought on this? As far as, like, would you be selling some? Which, I mean, I've sold along the way. I just didn't sell last night because I was sleeping. But where are we here? And what would you do?
I'm not selling Bitcoin, and it's because I don't have enough. And so my strategy with Bitcoin is obviously HODL for the very, very long term. I have designs on leveraging the asset and collateralizing debt positions against it. That those instruments I'll use later down the road. However, this is so encouraging for me because I have been unbonding and unstaking a lot of my altcoins in preparation for selling into this, what we'll call altcoin season or liquidity cycle that I'm hoping is starting now.
Yeah, I think there's something to be said because we've taken a look at the M2 money supply in the US, the M2 money supply globally, and there is a little bit of a lag, but it still continues to go up. So money is being pushed into the system. And as we take a look now, the Federal Reserve meeting is supposed to be at the end of this month, and the odds of them cutting rates are roughly 90% already. Because of when we take a look at the jobs report and things like that. So there's going to be another rate cut, we're pretty sure. And once we cut rates, and just like this always happens when we're at the all-time high as far as S&P 500, you see that we start to get some really crazy numbers going into Q4. So the question then is, why are people selling? It's because they're just hedging their bet. And we can see that, you know, historically speaking, we've talked about this many times, Q4 is a wonderful season or a wonderful time frame for Bitcoin and most traditional markets as well, especially for Bitcoin post-halving years. So what I mean by that is, of course, if we take a look at, this is 2025 up here, 2024 was good, 2023, 2022 was an awful Q4, as it usually is after you get a blow off top in 2021. Look at that, negative 16% in November, and that's just for Bitcoin, and negative 3% for December. But again, so far this month, and then, what is the date today, Jerry?
It's the 5th of October.
Damn, we're already up 8%. That's pretty good. And if we take a look at, let's take a look at the entire crypto market. I don't know if the alts are doing as well. Is it 8.16 as well? I don't think that's true. Let me do this again. Total market cap, apply. I don't know if this is on my side or not.
Oh, this is tracking the price of the total market cap, or that last page was.
Oh. Well, let me do this one more time. Bitcoin. I think this is an issue on my end. Well, we can just take a look real quick. Take a look at alts in general over the last 30 days or so. Last 30 days, Bitcoin, I guess you're right, Jerry, tracking 8.9, 7-day, 13%. Okay. Ethereum's up 13%, pretty good. XRP, 8. BNB is up 20% in 7 days. Golly. Solana, 15%. Doge, 13, so on and so forth. Cardano, 12%. Pretty good. But for 30 days, 1.5. So I guess, I mean, there are some things going pretty well. I know people are calling for an alt season, and it's going to happen relatively soon. I think most of us would like to see that. But that's for the monthly returns. And I wanted you guys to be aware of some other indicators that you can check out to kind of verify this stuff, because it's great when me and Jerry talk about this stuff, but you got to verify it, because we could just be degenerate liars, and we could also be AI generated by JP Morgan to fool everybody as we dump all our crypto, which I'm pretty sure JP Morgan does. So we see here Bitcoin spent output profit ratio, or the SOPR. This one's pretty interesting, because the spent output profit ratio it takes the average of the profit to loss of every transaction on a given day. So every day there's a transaction, there's profits and there's losses. And what it's saying here is that if it's above 1, that is a positive correlation, or that is a positive number for profits and losses. If it is below that, people are selling at a loss. That's all you got to know. And we're going to see here that since we're at all-time highs, people are selling. And what I found interesting about this one is that in July of 2025, it was a big, huge spike as people started to take some pretty big profits. Now, what did they know? I don't know if they knew anything particular, but there could be leverage plays, but they were in profit, and they're going to continue to take those profits off the table. So I know when people say, they're like, you know what, just hold on, just keep holding on. You can, that's great, but I think that there's something that should be done in the background for people who have invested for, like Jerry here, for years, or you in the comment section. Maybe you've been investing for over 2 years, 5 years, 7 years, to take a little bit off the table. Not just Bitcoin, but that's altcoins as well. So, Jerry, what do you think about this? Because today, this is, like we said, the 5th. It only goes the 4th of October, but I can guarantee that this has spiked up because there's some profits taking going on. What do you see with this?
Well, I see a great tool for traders, right? I see a great tool for traders. And the complexity of this is it's a little bit above me. The one thing I hold on to, Rob, is that if I buy Bitcoin today, I am literally assured, because in its history, nobody's ever lost money if they hold on to it for longer than 4 years. So even if I'm buying the top today, if I hold it for 4 years, it'll be profitable. That is the underlying context for the decisions that I make. Not so much indicators like this. This would be really beneficial to a trader who is looking at opportunity to acquire or sell into a market based on a direction. Like,
you know,
there's a sentiment underlying this somewhere.
that is a good. Oh, it's a good point. I mean, I never thought of that. Wake's not a big trader, but if you do like this, let's reset the zoom, and we can just see your profit and loss indicators going back to 2023. I mean, look at these beautiful prices. Holy smokes! Like the Bitcoin. Well, this is November, of course. It sucked, but I mean, even going forward, you go to 0.9. So people were selling at loss over here, December 2022, because it was below that 1 point. And as people start to sell into loss, I guess this would be, like you said, a pretty great time.
It's an opportunity to buy, and it's a relatively sophisticated mentality that you need to employ to utilize that. But it's interesting that Ben has worked that out, and here you have what I would say a relatively easy tool to use to get that information.
True. And remember, Jerry, everybody that's in the comment section and watching, they're pretty advanced anyhow. So if they're here, they're advanced, I think. So how about this one? So we got that one, which is pretty good. This is kind of like just another one to kind of to verify some other stuff. This is the Bitcoin percentage of supply and profit and loss. Again, it's the same thing. It's almost the same thing that we took a look at yesterday. I just want to show you just how crazy this is. This is the percentage of supply and loss is in red. And you can see today, it's essentially nobody, even though we hit 25. So someone bought that 25K, or excuse me, that 125K, and they may be in a little bit lost. It goes to 122K, but who cares? And it just kind of just shows you just how far off or far ahead we are as the Bitcoin price, again, back to 122. And you got 99.84% of people in profit. All it says to me is the same thing. There's almost 100% of people are in profit. They're going to keep taking their little funds off the table. And that's why we always have this little bit of a pullback. So, Jerry, same thing? Anything else? Would this help a trader?
Well,
or is this just another thing?
Obviously, the knowing everybody's in profit is not necessarily good for a trader, but the converse, right? The inverse of that, with when you see the percentage of sales in loss increasing, it's telling you two things. It's telling you sentiment and trend. And if you're strictly going by the numbers, the more people that sell at a loss, the better chance that you're going to profit if you buy and hold.
True.
Pretty simple deal. There's a very famous one. I've even heard you quote it. Warren Buffett used to say, hold with exuberance and sell into exuberance and acquire in fear.
Yeah.
Right? Acquire in fear. Buy when there's blood in the streets, and sell when your taxi driver is telling you it's a good investment to buy into.
You know what? I think that most of us here, I mean, me and you are the same on the same wavelength, Jerry. Most of people here are like, oh yeah, I got no problems, buying in that fear. The thing that I struggle with is how much fear, because I'm always looking for, are people capitulating at this point? Are they at the very lowest point? Or are the weak hands going to give me even better entry points? I'm always thinking about that, because I'm like, Bitcoin just dropped, 10% today. I can go to 20% down. And then if it goes down to 20%, I'm like, I can go to 30%. And before you know it, I missed the opportunity. I think that is the one thing that gets me. I don't know if everybody else out there, but that's what I have now. No problems buying into the weakness. I have problems not buying at the right times. So these are the things we look at. And like Carlos said, we're all pre-rich. That's right. But this is the one that I want to get to before we get into the AI stuff and electrical consumption. HODL waves.
Yeah.
I like this one. I like this one a lot, because it can show you who are the diamond hands and who are the paper hands. And there's nothing wrong with being paper hands. People say, well, you're selling into strength or selling into weakness, but you're getting paper or fiat cash. That's fine. You gotta, you know, some places just don't take Bitcoin. You want to pay off your mortgage, like you can ship over people a bunch of Bitcoin. But what I want to show you is what this is telling you is essentially who is holding and the percentage of wallets that are holding for a specific period of time. And we're going to go over Bitcoin and a bunch of altcoins, and I'm going to show you which ones have the most diamond hands out there. And surprise, it's not Bitcoin. So just to break this down, HODL waves are the bands that reflect what percentage of supply has been unused in a transaction for a certain period of time. So it goes into a wallet, just stays there. For example, like a 1 to 7 day band is the percentage of total supply that's been held for at least 1 day, but less than 7. 7 to 30 days is it's been there for 30 days or less, or 7 to 30 days, and then so on and so forth. So this is just like a way to look at like who's really diamond handsing and who's telling me a bunch of BS on X by saying they're diamond handsing. Check this out. There's a way to, like, you can just hide all, because this gets confusing to me. It's a lot of colors. I'm halfway colorblind anyhow, so it doesn't do well for me. But there's this one called long-term holders right here, LTH, and short-term holders. Long-term holders, as it's described here, is anybody who's held 6 months or longer. That's a long-term holder. For some people, that's BS, Rob. Long-term holders are 5 years or more. I'm just telling you what it is. You can break this information down any way you want to. Let's just keep it simple for a bit and just say, okay, long-term holders. Long-term holders for Bitcoin, it is roughly 72% of people who have held 6 months or longer. So you got 6 months to a year is 15%, 1 year to 2 years, 11, 2 to 3 is 7%, 3 to 4 is 5. And look at this, 4 to 5 years is 8% of the total amount of Bitcoin wallets that haven't moved it. And 5 to 10 years is 14%, and greater than 10 is 9. Jerry, how much of that do you think that just people just lost their seed phrase, lost their wallet? And how many of those are actually like people like, I'm not selling squat. I'll be here forever.
How many, you know what? Some smart audience member will do the math.
Thank you.
Right? It's pretty simple. We've estimated 2.36 million lost.
Yeah. Well, and that's on one side. I've heard other people say, no, it's like 6 million has been lost. And it's all over the board. So I don't know how much it is, but let's just keep in the middle. 4 million is just lost. I can see that. And people are passing away every day. People are losing mnemonic phrases in a fire every day. People are losing their ledgers in boating accidents. It's a real thing. It's awful. There's a boating accident, IRS. And my ledger just flew out of my hand. I don't know what's happening, but I'm going to go to El Salvador. So we have these things, but look at this. So that's the long terms. Let's break this down to the short-term holders, which are 6 months or less, or 3 to 6 months. And we can see that this is how it started. It's like that old adage, how it started, how it's going. And it's not that much. You got 27%, although I was kind of surprised it was that much. 27% of the short-term holders, but that's everybody. That's like the traders that get in here. That's the leverage plays. That's the new ETFs, people figuring it out and going, oh, I can do this in ETF. And that, I will tell you this, that is also the people that we talked about this yesterday. That's also the people that are selling their Bitcoin over here, and they're getting into an ETF over here because they have a lot of Bitcoin and they don't want to go through wrench attacks, or they don't want to lose it because they lost their mnemonic phrase or whatever else happens. So like, that's just how it is. So there's a lot of people. Jerry, does that surprise you, or does that feel like that's about right?
No, it doesn't surprise me. I had not necessarily put a lot of thought to that. But I could see the logic behind it.
Yeah. And then how would you like to see all the rest of the altcoins and who's Who's the real diamond hands?
Who the most diamond hand community in the crypto sphere is.
Yeah, this is going to be fun. So this is all on-chain analysis. Of course, you know, things can move around. Like you might have these different wallets that are just, you know, doing transactions left and right. Maybe there's bots in there, but the general overall theme is this is how much is in the, not how much, this is the wallets that are transacting and not transacting in the general sense. So if we take a look at this, I thought Ethereum, how would that be? Well, it's about a 50-50 split. So you're looking at, this is short-term holders. And of course, if it's a 50-50 split, let me do some math here. Okay, it should be long-term holders, roughly about 50%. And there we are, 49.78%. So look, isn't that interesting? 50-50 of people. But you have to understand, though, there's a little bit difference of Ethereum, right? Like if I want to transact in my MetaMask wallet, I need some Ethereum. That actually is the oil that is being produced for the transactions. So with this one, I can see like why people are actually using it, because you got to use it. With Bitcoin, you don't have to do anything. You just buy and hold it. So I'm not going to hold that against the Ethereum community when you actually need something, but it is like 50-50. So I guess it's not just a store of value. Cardano, again, not too bad. 49, roughly 50-50 so far. And I will say, because I was doing, when I was taking a look at this, let's see, short-term holders. What if we could add on like 6 months to 1 year people? It's a big chunk. So people for like, if you want to say like less than a year, you're looking at 65% hold it. And then the other ones, like the long-term holders up here, that would be like, again, 35%, somewhere around there. Let me make sure I did that right. Long-term holders. And then we got to take away this one. It's a big chunk. Yeah, 35%. Okay, so 50-50, 50-50, and then 75-25. Let's do the next one. Chainlink. Around 55%, so 45, not too bad. And that would be long-term holders. How about Algorand? Not looking good for Algorand. These are the long-term holders. You know what? Let me flip this, because we want to see who's the short-term holder. Look at that, Jerry. 70% of Algorand are people that hold it for 6 months or less.
Because the wallet's broken, you can't get the stuff out.
Well,
I'm joking. I made that up.
Yeah. Well, no. This is, again, this is people who hold from 6 months or lower. So this is the short-termers.
The circulating supply of Algorand has been locked up in quote unquote the long-term holder category. Wow, 75%. That's diamond hands.
Well, no. Like, look, this is long-term holders. This is people that have held, this is long-term holders for Algorand. Wallets that have held from 6 months to a year is roughly 8%. 1 year to 2 years is 5%. 2 to 3 is 12. 3 to 4 is 3. 4 to 5 is 1. And then 5 years to 10 years, which it hasn't been out 10 years. I don't think. No.
Okay.
So this is the long-term holders. It's only 30%. The short-term holders, 6 months or less, 70%. Meaning,
okay. I had that inverse.
Yeah. Well, it's okay. Now, how about, so far, Algorand is the one that has the most, but people will say, well, we need that for transactions. Okay. How about Dogecoin? The #1 meme of all time. And again, we're looking at short-term holders. You would think it'd be high, right? And look at that. This is 70% are long-term holders. Again, 6 months to a year is 17%. 1 year to 2 years, 14%. 2 to 3 years, 18% of all Dogecoin hasn't moved for 3 years.
Wow.
3 to 4, 1%. 4 to 5, 2. 5 to 10, 6. Greater than 10 is 10%. Soak that in, everybody. Dogecoin, not a bad play. And then I will tell you that there was a summary about the amount of wallets it's all centralized in very few wallets that is Dogecoin. Whatever those wallets are and wherever it's centralized into those 20 or so wallets or whatever it is, they seem to either have lost the keys or just ain't selling. And that's Dogecoin. Dogecoin. Not too bad. Okay. So yeah. So let's see. I'm just curious. I'm going to do this. So that again is from 6 months all the way to 10 years. Let's take out the 6-month part. Because I think long-term holders, me personally, is 1 year or above. But look at that. Still 52%, over half of people have held Dogecoin. Insane. Okay. And we'll round it out now. Maker, let me add on 6 months to a year. 66% long-term holders. Looks like Maker's one of those big ones. Ripple, 65%. It's pretty close to Bitcoin, actually. Aave, nobody's really. 27% are long-term. And that's pushing it. 27%. And then let's see what else we got. Last one, Litecoin. This was surprising to me. I'm like, wow. I didn't think people would hold on to Litecoin for this long. I know Charlie Lee didn't. So, so that's about 69%. So Jerry, going through those, did some of those surprise you? Like how many diamond hands are in those specific communities? Like Dogecoin blew me away.
Doge absolutely shocked me. Here's the thing, though. You highlighted two chains that have elastic monetary supplies, and so it's one thing. Ethereum expands its monetary supply every year. It has an inflation rate that is infinite. So does Doge, right? Which makes it even more interesting. The fact that there is more Doge in the circulating supply year over year, and they have such a high HODL rate. That just is amazing to me.
Yeah, I guess the Dogecoin millionaire was right. So that's, you know what? I want to see. Let's take all this stuff away. Greater than 10 years. 10%. People have held Doge for more than 10 years. 5 to 10 years. 4 to 5. And then 3 to 4. I think 2 years or more is pretty. Look at that, Jer. Almost 40%.
Amazing.
And that's Dogecoin.
Amazing.
Yeah. So, well, everybody, let me know what you guys think about it in the comment section. And now, and we'll get to your questions in a bit. I just want to go over this real quick. Electricity. I know everybody's like, who cares? But yeah, I think it's a big prospect, especially moving forward with Bitcoin mining and, of course, with AI. This was a talk that Jeff Bezos was at, who's the founder and CEO of Amazon, if anyone knows. And he says this is how we're going to essentially solve the electrical problem. And I was kind of like, that makes sense. And I can see why he talks about it. But just take a listen to this and make sure everybody can hear this. Okay, this is about a minute or so.
One of the things that's going to happen in the next, it's hard to know exactly when, it's 10 plus years, but I bet it's not more than 20 years. We're going to start building these giant gigawatt data centers in space. So these giant training clusters, those will be better built in space because we have solar power there 24/7. And the solar power there are no clouds and no rain, no weather. So you can build we will be able to beat the cost of terrestrial data centers in space in the next couple of decades. And so space will end up being one of the places that keeps making Earth better. It already has happened with weather satellites. It's already happened with communication satellites. The next step is going to be data centers and then other kinds of manufacturing. One of the things that's going to happen.
That's crazy. So someone actually asked me this. They go, because I said, wow, I think I need to get into, you know, some type of stocks for electricity. And somebody asked me like, well, which one would you get knowing this thing about space? And I said, you know what makes sense? I need somebody who's already is delving into solar panels, already has that pretty much understood. And also it'd be great if they could make their own rockets. And I thought to myself, well, that would be Elon Musk and Tesla, because they already have Solar City or Tesla Solar, whatever you want to call it. And they also have SpaceX. So it's like Charles Hoskinson said, I forgot which interview he was at, but he said, you know, Musk wants to go to Mars. So he makes the things that will make that actually able to happen. One, he's going to have these autonomous robots because it's very difficult to move around on Mars. So you'll just make a Optimus. Then, of course, he needs electricity. So he makes all these different solar panels. And he's got to get there. So he's going to have to use SpaceX. And oh, yeah, it's very difficult to live on the actual surface. So they'll just mine down underneath. And that's the Boring Company. So when I see these things kind of put together and then Jeff Bezos talks about it, I'm like, that makes sense. I would not have thought about that. So it's just before we get to, and Jerry's just dying to get into this one. I know it. He loves this stuff. But I will just say that there's an electrical gap. We've already talked about this. This is how much electrical use is right now for just ChatGPT and OpenAI. We're not talking about DeepThink from China. We're not talking about Grok from Elon. Just OpenAI. Right now, it uses 0.23 gigawatts. By the end of this year, apparently, it's going to go to 2 gigawatts. Everything that's happening there. Annual growth is about 1.8. So by 2033, they're estimating 250 gigawatt usage, which is more than India, Germany, UK, Singapore, Ireland, Iceland, Malta. And that's 125x. And then if we take a look at, this is from Arcane Research, how much electrical usage we're going to need for Bitcoin. Right now, it's whatever this is, like 70 terawatt hours. This is in hours and distribution, it's a little bit different. But you can see that if there's a neutral scenario, which is 500,000 by 2040, you don't need as much Bitcoin mining power. But if it goes to say like 2 million by 2040, there'd be so much competition that they're going to need 894 terawatts, which is, again, it's either 3x or 125x, depending if you've got a neutral, a bearish, or a bullish scenario. So, Jerry, you're into AI. You got a company with AI. How does this all work? Or, well, electricity, I should say.
It's fundamental. Just like oxygen is fundamental to our existence, electricity is to the digital world, right? And so one of the things, and I'm very grateful that I got involved with Hypercycle in the early days back in 2023, because it exposed me to the expansion of technologies that gobble up electricity like nobody's business, right? Crypto introduced me to Bitcoin. Bitcoin introduced me to monetary policy, but also understanding energy consumption, right? And one of the glaring weaknesses we as human beings have around the world is, regardless of what country you're in, you don't have the physical infrastructure for the growth needed for the digital wave that is just sweeping into new fields, right? AI, the Internet of Things, obviously Web3 and blockchain and specifically Bitcoin. And so it's really interesting that we have green energy technologies like wind power, wind, solar, and hydro, but there are also others, right? The reemergence of very clean, very efficient, very safe nuclear. There are hydrogen technologies that I'm reading about and understanding about. I mean, you can go online and find actually very easy to understand, but technically oriented stories and videos pertaining to small neighborhood style nuclear facilities that are using already, we'll call it used uranium sources from larger nuclear facilities. So they're recycling spent uranium in much smaller, compact facilities. If you thought about it and you thought, okay, if we're going to solve the problem on Earth with nuclear,
Yeah.
it takes about 20 years to build a facility.
Those big, large facilities.
Right,
But
that would power the East Coast, that kind of thing. Those are, or power the state of New York or something like that. Those are way far out. So there are a lot of new technologies or reimagining of existing technologies coming to the table. We all know one thing: we need more juice.
we need more juice.
We need more juice. And so I don't know if the audience had caught this, but when you had submitted that on X, I think I replied or sent you a private message saying, hey, we should create a power DAO immediately and start bringing the community into this, because I can tell you right now, when Tesla or Amazon build their power plants, we will not benefit. We will only be consumers. The only way we can benefit is to buy Tesla stock or Amazon stock, but we're subject to all the downside capital risks because we're the last ones to get paid in that structure, if you understand stocks and the capital structure of a company. So,
Jerry, I understand very little, so you had to break that down for me.
Oh, okay. When you buy a stock in a company, you're the first one to get bounced in a default or bankruptcy, and your exposure to the upside is minimal compared to owning the asset, owning the thing yourself, right?
Okay.
So, for instance, if I put $1 into Amazon stock and $1 into your roof, like the roof of the house you're in right now, I will earn more from the $1 I put into your roof than I would the Amazon dollar.
Got it. Sounds good.
Because of all the overhead. And so what I was thinking, what I said to you is, we should create a DAO, a digital asset news DAO, that monetizes the expansion of digital services created by green energy sources. So it doesn't matter if your home is being powered by solar, wind, or hydro. We can monetize that.
And then how would that look legally? Because like DAOs and things, because I'm always thinking about the SEC and stuff.
Sure.
I'm like, how do we do that? How does that happen? If anybody else wants to do it too.
You register the DAO in a jurisdiction that's friendly. For instance, Wyoming, right? We create an LLC in Wyoming. The DAO is a legal structure, and basically the DAO participants, because they're involved in the governance. See, you're not involved in the governance of Tesla or AWS, even though you may get a pamphlet that says, here, this is what we're voting on this quarter. Unless you are a bulk owner of the company, your savings basically nothing. And so when the DAO governance is saying, okay, we should release X amount of funds of the DAO to the NFT holders or the DAO token holders, you just do it. You put it to a vote and bang, done.
Well, this will be an evolving.
Yeah, this is not something you solve in 5 minutes. It's definitely in line with the way we are seeing regulations restructured around the world. DAOs are becoming more and more known to various jurisdictions. Obviously, in the United States, there's much to do about it. Some states actually have hardcore laws already, which are very favorable. Like if you want to create a DAO for X or B or Y. Yeah.
You can just do it. Yeah. Well, maybe we'll have to hash that out. Wouldn't that be interesting for a DAO for electrical usage and how we can monetize that moving forward? Interesting. All right, everybody. Well, that concludes for today's show. We only went a little bit long, but a lot of things to cover. Now let's get into everybody's favorite part, the Q&A where we get bombarded with a bunch of questions that we answer the best of our abilities, and then we ask you guys questions, and we go back and forth. So let's see. What do we have here? Taoism. Red Panda Pie had a good one. He says, I call shenanigans. It's crazy how the price increases when it should be going down in the 21st century. Free electricity for everybody. And that's true. You would think that, you know, as technology goes on. Okay, here's a prime example. When flat screen TVs came out, it was like the thing. You're like, wow, look at that. It's not huge and in the back, and there's no tubes to it. It's just flat. You know how much those things cost? Thousands of dollars. I remember going to like Best Buy, and I was like, how much is this one? It was like a 24 or 30-inch type of thing. He's like, oh, it'll be like $6,000. I'm like, wow, maybe one day I can get that. And now you go to Walmart, look at this piece of trash, 50 inches for $200. This is ridiculous. And it's like technology kind of makes that. Now, of course, like electricity, you know, like Panda Pie says, hey, we should be having this a little bit cheaper, but it just doesn't seem to be happening. Maybe there's a little manipulation of prices, but that would never happen in the real world. Who knows? Of course it happens.
Technology by its nature is deflationary.
Yeah.
But that would be only true if the value of $1 in 1970 is the same purchasing power as $1 in 1990. Then technology is deflationary. The reason it isn't, it's because the what they call the denominator, the US dollar, that's the thing that's changing value, not that television. The television is costing less.
Well, that part is very true. It is costing, and everything seems, well, not everything. It seems like, well, the things that are important, like food, that also goes up like crazy. But it seems like some of the technology is just keeps going down. But here we are. All right, let's see what else we have. Trainer DEC says, hey, Rob, is this a good time to DCA of Bitcoin, or is it a little bit too, as far as the risk levels go? Well, I'm still buying little bits here and there. It's automatic. It goes off on Kraken, so I haven't really even touched it. Usually there's an alert that comes in through, because I use Ben's app over at Into the Cryptoverse, and it hasn't triggered. I don't think it has. Let me see. Because I'm just looking to go for risk levels to 0.6. And if you go to the website, oh, there it is. Here's all the risk levels. Let's see where we're at. Again, the most risky, XRP, 0.75. Hey, I had Jerry, I don't know if you know this guy named Mark Kohler. He's a CPA and a lawyer, and he does a lot of things with like tax optimization and how to set up legal structures for businesses. And he's a smart guy, very exuberant in what he talks about. It was great. And when he came on yesterday, he was talking about, you know, the different tax advantages and such. And I asked him, I go, hey, Mark, do you own any crypto? He's like, oh, yeah. He's like, I did a 3X on XRP and Solana. And it was funny because like half of the comments were like, I like this guy. This guy knows what he's talking about. The other half were like, this guy's an idiot. He's an XRP and Solana. I'm like, if you just listen to Mark, don't worry about what he got into. It's the information he gave yesterday or 2 days ago was awesome. Anyhow, back to the question. Let's see, Bitcoin, look at that. Yeah, 0.53. So still doing it. I still see Bitcoin could go up to 150K this cycle. Some people are saying 250K or 500K. I don't know if it's going to do that. But yeah, I always look at the money in my bank account, and I look at it like this is melting. It's doing nothing for me. So I pretty much been broke the last 3 years in the bear market, even today. My bank account is very anemic, we'll say. But yeah, it's still in the right ranges. We'll see how that works out. It is. Let's see. EOS, of course. Utilities are heavily regulated. There's your answer. That could be something, actually. And then there was one thing that I know somebody said, like, you know, why would we do this as far as electrical data centers or data centers in space and for solar panels? There was this post I was going to pull up. I forgot to do it. And I heard this this point a long time ago that if we actually put solar panels in a very specific part of the world where it's a massive amount of sun, it could actually generate enough electricity for the whole world. Now, the problem would be, of course, and I think this is a bigger issue, which is how do you get the electricity from, say, space, and if it's going to store into batteries, back down to Earth? Because here, like what we talked about, if you cover just 1.2% of the Sahara Desert, you could actually do the whole world. The problem is how do you get that from the Sahara and transport this electrical output to, say, Austin, Texas?
You can't. It's actually impossible. However, if you're trying to take a watt that you created in the Sahara Desert and get it to New York, impossible, unless you use some intermediary. So you generate a watt in the Sahara, put it into a battery, fly the battery over to New York. You could do it that way. Or this is the Bitcoin conservation of energy approach. You generate the electricity, you run it through a Bitcoin miner, and you create the Bitcoin at the site of generation. Now you have that value stored. You can use that value to buy electricity somewhere else.
Yeah, maybe something like that. Bodan had a good point. He said, Rob, there's a solar farm outside of LA in the Indio Desert near the Nevada border. Still not enough to power LA. Did you see? I don't know if you have ever followed this story, but they pumped billions of dollars into that structure for solar, because it would make sense. Like, it's right there 24/7, well, not 24/7, 365 days out of the year. There's almost like massive amounts of sun. The problem was, like you were talking about, is like getting there, transporting that electrical to where it's actually being consumed. And then also there was budget overruns and different problems, which, who would have thunk that would happen in California, but it actually happened. Let's see. What else? Can't you shoot energy like the new phone chargers? That'd be great, wouldn't it be? Let's see.
It would be wonderful.
TC says, crypto for dummies. Forget the graphs. You sell the max when the fear and greed indicator is extreme greed, and you buy when it's max fear. It's that easy. There's something to be said about that, but I will say, like, for like max euphoria, it goes for quite some time. And when here, I'll show you. I don't know why I keep saying this thing. Jerry, what do you think about that anyhow? Fear and greed, as I pull this up.
I think Warren Buffett was right. Buy when there's blood in the streets. Right?
Yeah.
Buy into the fear. If you believe in the thing, then when the emotional state of the market is such where most people are selling it, it's a great buying opportunity, right? If you believe in the thing, don't just buy something because it went down.
True. Don't just buy it because I remember this project called Luna.
Oh, of course.
Yeah. I remember on that day as it was collapsing, I didn't have any more. And I was like, maybe this is a good entry point to get in, because Luna sounds like a pretty good one. Why is it collapsing? And then I remember it was Simon Yu who came out and said, don't buy that right now. You are going to regret it. I was like, oh, I guess so.
Yeah, anything you bought then, you were just feeding the exit bags of others.
Very true. Exit bags. So this is, to piggyback on this comment about the fear and greed index, this is Bitcoin price color coded by the fear and greed. And we can see that, let me just blow up. Let's just go back to better times, Jerry. 2021, when you could do no wrong and you could buy whatever altcoin you wanted to and write it up and be called a genius because you were a genius.
That was me.
If you take a look here, extreme greed for Bitcoin, and of course selling, actually it was even below this. The price was 15,000 in November 2020. And this is, anything above 85, 90s. So, and this is going back 4th of November, 7th December, 30th, into the next year. It was like 4 months. Well, 3 months roughly, 3.5 or so, of where you just had extreme greed, and then you had, forget what I said. You went from extreme greed to fear. What the heck happened? that's a long time to go. Which one is it? Do I sell at 15,000 here, or do I wait till it's 40,000? Because it's been extreme greed the whole time. That's the problem with within greed and fear. And I can show you the same thing inversely with just fear and buying. It's like it lasts forever. But it's a good thing to take a look at, just as like one of those indicators to verify everything else. All right. What else we got? Who cares about Luna? What's Luna at now? It's, I think, fractions of a penny. It's actually worthless. Or Luna Classic. Remember that one? Even worse. Let's see. I think that's it. I think we answered all the questions today.
Dun, dun, dun.
Yeah, we did it, Jerry. This is the first time. Look at that. We hit all-time highs, and we answered all the questions because no one has anything. Perfect. All right, everybody. That's it for today. We're actually coming to an hour. What's that, Jerry?
Happy hunting, everyone.
Happy hunting. Hey, for next week, maybe we can flesh out some of that electric Dow, power Dow.
And just a quick update. So when we do the reconciliation of my stake pool stuff, Protecos is there is a big highlighted deal in the notebook. It has not been forgotten, my friend.
Oh, I'll tell
in the chat there somewhere.
Yeah, meme. I'll let her know.
Meme. That's it. Keep me honest, not meme. I appreciate it, my friend.
Yeah, sounds good. All right, buddy. So that's it for this weekend. So again, get outside, enjoy, touch snow, grass, dirt, sand, whatever you got to do. Don't worry about the price. You're in the best time to be into crypto, you lucky son of a gun. That's it for today. Thanks, everybody. We'll see you in the next one.